Sometimes costs are incurred directly in relation to revenue of a given accounting period in subsequent periods. So, for example, when you pay bonus which is linked to profits, when you pay bonus to employees which is linked to profits, on 31st of March your accounting year has ended, but you do not even know your profits, because the profit and loss account and balance sheet will be prepared either in April or up till 15th of May, you have enough time. And then once it is prepared, then management will approve the bonus. So, the bonus for the year ended 31st March 2024 will not be paid on 31st of March 2024, because it is linked to profits. So, it will be paid on in June 2024 or July 2024. Are you getting what I am saying? Because audited results के basis में board or somebody will approve, the management will approve. So, amount of expense is estimated relating to an accounting period in order to make a reasonably accurate measurement of the profit or loss of the period. So, the bonus for this 31st March 2024 will be paid in the next year. That is what I am trying to say, right. Example is provision for bonus, and yet other examples are bad debt expense. So, bad debt is basically when you sell on credit. When you sell on cash, there is no issue, you get the full amount right now, but when you sell on credit, past experience will teach you that at least 1% of your debtors will not pay you. They may genuinely be bankrupt कि पैसे ही नहीं है मैं कहाँ से दूँ, or they may have bad intention कि खरीद तो लिया पैसे नहीं देंगे. You might have heard stories of such people also. Or there may be other reasons why they are not able to pay, right. So, in such cases what happens is, on 31st of March you say कि यार I have 100 rupees of debtors, but I know from past experience कि 1 रुपया इनमें से 1% debtors ऐसे हैं who will not pay me. So, I will actually only collect 99 rupees from my debtors. So, 1% credit sales, let us say, got converted into receivables 100 minus 1% is bad debt. So, you will actually receive only 99. So, let us look at bad debts with an example. So, we have this company called Roshni Traders with owner's equity of 25,000, and let us say the business makes 4 credit sales of 2,500 each. So, how much is the total sales? 10,000. And what the cost of sales for entire 10,000 is 5,000. So, revenue is how much? 10,000. Revenue is 10,000. Cost of goods sold is 5,000. What is the gross profit? 5,000. And now, for the time being, do not suppose this, but let us look at how it will look like if there is no bad debt, and then we will see how it will look like if there is bad debt, right. Let us see the next slide. So, my profit and loss account will have sales of 10,000, cost of goods sold of 5,000, and profit for the period is 5,000. Are you all clear on that? Yes, and what will my balance sheet look like? So, I started the business with owner's equity 25,000 against, let us say cash था, मान लो cash था 25,000 at that time. So, other assets can be cash, right. And now what happened is I bought how much of stock did I buy? 5,000. So, when let us say I paid in cash. So, I have stock of 5,000, but cash went down from 25 to 20. Now, what is the profit that I made in this year? 5,000. This 5,000 of profit will appear as retained earnings, and what is the entire sale was credit sale. I did not get cash for it. If I had received cash, cash will go up by 10,000, but I did not get cash for it. So, what will I get? I get accounts receivable up by plus 10,000, right. Are you all clear? Is anyone not clear? But this is from days 1 and 2 actually, just revising. And now let us look at the impact of bad debts on the financial statements. The previous we remember Sales is still 10,000, cost of goods sold is still 5,000, but now we have bad debts of 2,500. One of the credit sales, we said there are 4 credit sales of 2,500 each. One of the credit sales has become bad, and therefore 2,500 is my bad debt expense, right? And so profit goes down. Pehle 10,000 minus 5,000, 5,000 was the profit. Now profit goes down by 2,500 and now it is 2,500, right? And this 2,500 of profit is also my retained earnings. Now last time it was 5,000. Do you remember that? Last time this was 5,000. And if there is a bad debt, then the sum of this side last time was 25 plus 530, but it has become 27,500. So there is some change in asset side also, because the accounting equation must balance. Other assets cash are still at 20,000, and accounts receivable, which was earlier at 10,000, right? Accounts receivable, our debtors were supposed to pay us earlier how much? 10,000. But after this bad debt, we make it collection loss, or you can call it estimated collection loss, you can call it provision for bad debts or whatever, or bad debts is 2,500. So now we will only get 10,000 minus 2,500, which is 7,500. But so the impact of bad debt is it will reduce owner's equity. Impact of bad debt is it will reduce owner's equity. So bad debt expense reduces owner's equity from 5,000 to 2,500, and it will reduce asset. Which asset? Accounts receivable. So accounts receivable goes down from 10,000 to 7,500, and the impact can be seen in the profit and loss account, and the impact can be seen in the balance sheet. Here retained earnings down 2,500, accounts receivable down 2,500. Are we all clear on the impact of bad debts on our profit and loss account and balance sheet? Right? And if you remember, I had already said that in the US they call fixed assets as non-current assets or long-lived assets. So you can call it by any name. These are fixed assets. We already know. And what are fixed assets? Land, building, furniture, fixture, machineries, plant, equipment, laptop, this stand, etc. Okay. So fixed assets written off and matched as expense against the revenues of different periods, and this is actually the concept of depreciation, which we let's आगे चलो यार. So let's look at the concept of depreciation with a very small example, and we will do multiple examples of depreciation today, not multiple, 2. A machine is purchased for 5 million having a 5-year life and no salvage value is used in a business. During the life of the asset, it will be able to earn revenue of 10 million. So first let's just do a small little cost benefit analysis, very small cost benefit analysis. Life, what's the useful life of the machine? 5 years. What's the cost? 5 million. And during the life it will be able to earn revenue of 10 million. So which we will earn to be a linear function, right? We will assume it's linear. So we will earn equal amount every year. So how will it look like? So yeah, first period 1, 2, 3, 4, 5 revenue. We are talking of revenue first. How much revenue will we earn? 2 rupees every year. So it's 10 million. So the figures are in million, right? 2, 2, 2, 2, 2, 10 million, right? Assuming that revenue is earned evenly. Cost expiration over the period of use of assets. So machinery cost period. This part is clear, very straightforward. So what is the cost? Cost 5 million cost has to be spread over 5 years, which is very simple using straight line basis. 1 million every year. Years 1, 2, 3, 4, 5, 1, 1, 1, 1, 1. And what is the unexpired portion at the end of the year? It's the remaining value. It's the remaining value of 5 rupees in year 1. What is year 1, by the way? Year 1 means beginning of year 1 or end of year 1? End of year 1. What is beginning of year 1? 0, right? So at the end of year 1 we charge depreciation of 1 and original value was 5. So what is left is 4. At the end of year 2 we charge depreciation of 1. So in 2 years jointly we have charged depreciation of 2, and then the remaining value is 3. At the end of 3 years, what's the total depreciation? 1 plus 1 plus 1, 3. So we are left with 2 and so on, right? So every year if we see revenues 2 million, cost 1 million, so we make a profit of 1 million every year. I am giving the simplest possible example so that you see the cost benefit analysis of having a machinery and how it is being depreciated. I know it's very, very simple, but we will continue to look at more complicated examples gradually during the course of the sessions, right. So this is clear कि revenue total 10, cost total 5, profit is 10 minus 5 over the 5 years. So depreciation, some of the concepts. Original cost is the cost incurred in making the asset available for use at the first instance, and this amount is specific and known on the acquisition of the asset. So, but original cost of a machinery includes not just this acquisition, but also the transportation cost, the installation cost. So, let us say you bought a machinery, for say 1 lakh rupees, right? No, 10 lakh कर देते हैं, for 10 lakh rupees. You incurred 50,000 rupees, for transporting it from some other state to here. So, what is the cost? 10 lakhs plus 50,000, that is also included in the cost of the machinery. Then you have to hire an engineer to install the machinery. वो ट्रक वाला ला के रख दिया, but you still don't know how to install it. So, you have to hire an engineer to install it. So, the installation cost of the engineer and everyone, all those put together, is another 50,000 rupees. So, the cost of the machinery that will be depreciated is not 10 lakh, which is the original value of the machinery, but 10 lakh plus 50,000 for transportation cost, which is called freight or freight inwards, plus 50,000 for installation. So, 11 lakhs is the total cost of the machinery. You got the original cost. What is the salvage value? Let us say when you buy a car, you use it for 10 years. Let us say you think 10 साल तो use करेंगे. After 10 years, does the value of car become 0, or can you still sell in the market at 50,000 rupees, 1 lakh rupees, something like that? कुछ तो मिलेगा. So, that value जो कुछ तो मिलेगा is called as the salvage value or the terminal value. That value is called as salvage value or the terminal value. So, which is recovery or sales value of the asset at the end of its useful life, and we do not know कि कितना मिलेगा. So, we have to make an estimate, because who has seen the future? Many of the things that we do in accounting are for 10 years later. Do we know the value of 10 years later? We do not know, but we think कि हाँ आजकल अभी देख रहे हैं कि yes, if you sell a 10-year-old car, let's say it's a Honda City, let's say a 10-year-old Honda City can go for 1 lakh rupees, let's say. So, ठीक है, आपने भी 1 lakh पकड़ लो. You get what I am saying? So, it's an estimate, and this is how it's done. And useful life is, of course, again an estimate based on past experience, based on what you observe in daily life. The expected time period for which the asset is to provide economic service or productive life, estimated based on experience or technical factors, right. So, how much should you depreciate? When you buy a Honda City for 11 lakhs with a terminal value or salvage value of 1 lakh, should you depreciate 11 lakh being the cost, or should you depreciate 11 lakh to cost है, 1 lakh is the salvage value. So, I will only depreciate 11 minus 1 equal to 10 lakhs. 11 total depreciate करना चाहिए. And how many say 10? 5 say, yeah. So, actually in real life you take out the salvage value and then you depreciate, right. You take out the salvage value and then you depreciate. So, depreciable cost is not the original cost, it is original cost minus the salvage value. And but book value, and what is book value? Book value is that remaining value that I just showed to you. The remaining value that I just showed to you in the previous example is the book value. And what is book value? Original cost minus accumulated depreciation. Do you remember I was saying 5 minus 1 is 4. Book value at the end of year 1 is 4. But in year 2 I was saying 5 minus 1 of first year minus 1 of second year. So, 2 years of depreciation, 5 minus 2, therefore 3 is the book value, and so on, right. So, book value is original cost minus accumulated depreciation, means depreciation of this year and depreciation of all the previous years, right. And what are the two most common methods in use? One is the straight line method, one is the written down value method. We have other methods also, which you will see in sessions around 10ish, around session 10 we will see. But for the time being, let us only focus on two methods, straight line method and written down value method, the WDV method. Straight line method is useful for assets which provide equal benefit each year, like plant and equipment, right. एक मशीनरी लिया है तो 10 साल तक प्रोडक्शन करता रहेगा. And written down value method is more useful for assets which provide more benefit in early years, like car. You know, when you buy a car, will you be able to sell a 1-year-old car at 9 lakh? You 10 लाख की गाड़ी थी ओरिजिनली, 1 साल बाद बेचने जाओगे, 10 लाख की गाड़ी थी, 10 दिन बाद you want to sell at 10 lakh, will anyone buy it to you from 10 lakhs? बोलो कि भैया पुरानी हो गई है, 10 लाख में ही खरीदनी है, मैं शोरूम से खरीदूंगा, वाई शुड आई बाई फ्रॉम यू? 10 लाख में ही गाड़ी खरीदनी है, आई विल बाई फ्रॉम शोरूम, वाई विल आई बाई फ्रॉम यू? आर यू गेटिंग दैट पॉइंट? द मोमेंट 15-20 दिन हो गए, नो वन विल बाई, बिकॉज क्या पता कोई एक्सीडेंट करी हुई गाड़ी मेरे को दे रहे हैं क्या, राइट? वाई आर यू सेलिंग ए 15-day old car? You know, there is a Nobel Prize winning economics article, but we are not going into that, and where the used car market is evaluated as peach versus lemon, so but because we are not entering that territory, let's focus on accounting. So 1 साल पुरानी गाड़ी if you want to buy, it will not come at 9 lakh also. The 9 lakh तो straight line से था. The truth is, he will say 8 लाख से ज़्यादा मैं नहीं दूंगा. Are you getting what I am saying? I will not pay more than 8 lakh rupees, and so on, right? So in the initial years there is more depreciation, but what is the fall in value between 0th year and first year is 2 lakh. Say, but the fall in value between 7th year and 8th year, is it that much? 2 lakhs? No. Are you getting what I am saying? कि 7 साल पुरानी गाड़ी अगर 2 लाख में मिलती थी से, तो 8 साल पुरानी गाड़ी 1,50,000 में मिल जाएगी. Are you getting that? But it won't be a 2 lakh difference. So let's see the example, and when that slide comes, please everyone must do the calculations using preparing the table. Our example. So depreciable cost of the asset is allocated as an expense against the revenues during each year of useful life of the asset under straight line method. Next. So this is the question. You don't have to write the question, but prepare the table in the next slide. Company acquires a machine at the beginning of operations at 10,000. It is expected that life of the machine is 10 years, and it will have, look at the words, no salvage value. At this point, let's assume no salvage value. That makes our life easy. Salvage value we will do when we do chapter 8, that chapter in session 8 and 9, right? So 10,000 over 10 years. So let's prepare this table next. Everyone please prepare this table. Depreciation at 10% per annum. Pen and paper, please prepare the table. Prepare this table. So how do we prepare the table? First we write down the year. So this is how the depreciation table is prepared. First we write down the year 0 to 10. Year 0 means now, beginning of year 1. Okay? What is the original cost of the asset? 10,000. The original cost of the asset is 10,000. That will always be the same, 10,000. What is the annual depreciation? In year 0, is there any depreciation? No. Is there any accumulated depreciation? No. Then remaining book value is same as 10,000. So remaining book value will be 10,000 here. Okay? And then year 1 cost is still 10,000, but annual depreciation at the end of year 1 is 1,000. So what is the accumulated depreciation? 1,000, depreciation of all this year and all the past years. So at the end of year 1, this is the only year, 1,000. And what's the remaining book value? Remaining book value is 10,000 minus accumulated depreciation, original cost minus accumulated depreciation, which is 9,000. At the end of year 2, so I would recommend year 2, 3 tak likho, and then write years 9 and 10, because you don't want to write too much. So write years 0, 1, 2, 3, 4, 5, 6, 7, 8 chhod do, and then write 9 and 10, right? So 10,000 annual depreciation, 1,000 accumulated depreciation for year 2, how much? 1,000 of this year and 1,000 of previous year, so 2,000. And so this is what you are doing. Annual depreciation 1,000, accumulated depreciation at end of year 1 was 1,000, but at the end of year 2 was how much? 2,000. At the end of year 3 was 3,000. So every year it is rising by 1,000, because as you can see, and what's the remaining book value? 9,000, 8,000, 7,000 and keeps going down. What is happening in year 9? Cost is 10,000, annual depreciation is 1,000, accumulated is 9,000 and remaining book value is 1,000. And in year 10, again 1,000, accumulated depreciation is 10,000, so remaining book value is 0. Are you all clear on what's going on? Everyone clear? So let's move. Now so what did we see? What did we note? Annual depreciation 1,000, WVD at the end of first year 9,000, second year WVD 8,000 and so on. Book value becomes 0 at the end of year 10. That's what we have all noted. So now let's prepare another table, but this time we will do it based on written down value method. And what is written down value method? Depreciation is taken as a certain rate applied to the written down value of the asset. So you are depreciating based on remaining book value. You are depreciating based on the remaining book value. In the straight line basis, we said cost is 10 lakh for the car. So we depreciate 1 lakh per annum, right? That's the over 10 years. That's the straight line basis. But in WDV, we say I will depreciate it on the, let's say 20%. So on first year, I will charge 20% depreciation on 10 lakh, which is 2 lakh rupees. But second year, I will not charge the depreciation on 10 lakh. I will charge only on 8 lakhs, which is the written down value or the remaining book value. Remaining book value, what's the other name? Written down value, right? So we will charge depreciation on the written down value, and so of course in such cases, initial years you will have higher depreciation and later years you will have lower depreciation. So again for written down value, I recommend you write this header, you have to write years 0, 1, 2, 3 you write, and then 9 and 10 you write. So 10,000 annual depreciation for year 1 is 2,000, right? What is the accumulated depreciation for year 1? 2,000. And what's the remaining book value? 8,000. Are we all clear on what's going on? For year 2, 10,000, but annual depreciation for year 2 is not 2,000, right? It is 20% of the remaining book value of year 1, which is 8,000. So 20% of 8,000, therefore 1,600. And accumulated for both the years is how much? 2,000 plus 1,600, 3,600, and remaining book value is original cost minus accumulated depreciation, 10,000 minus 3,600, which is 6,400. And the year after that you depreciate at 6,400 into 20%, which is 1,280. So when you keep doing this in year 9 and 10, in year 9 your depreciation is 336, accumulated depreciation is 8658, and remaining book value is 1342, and in year 10 annual depreciation is 268, accumulated is 8926, and remaining book value is 1074. But in year 10, now look at year 10 again, look at the yellow portion what I have written. Since there is no salvage value for the asset at the end of its useful life, the terminal year depreciation, terminal matlab final year, depreciation will be taken as 268 being the normal depreciation for the year, plus the remaining book value is also depreciated, because you know when the assets become too old, what we do is कि यार इसको निकालो बुक से. You know, why do you want to tell anyone, just as 50 साल पुराना एक आपके पास जूसर मिक्सर पड़ा था, लेट अस से गार्बेज हो गया है, just throw it out of home and get rid of it. Are you getting what I am saying? You throw clothes that are like 15-year-old, अब तो वैसे भी नहीं आते, but are you getting what I am saying? कि जो पुरानी हो गई उनको निकालो, कबाड़ी को निकालो, right? Throw out scrap from our house. And so therefore at the end of 10 years we will depreciate it at 268 plus the remaining book value of 1074, and in the last year we will depreciate 1342 and close the topic. Are we all clear on what's going on? So in year 10, see, year 10 using the same 20% on remaining book value, year 9 ka remaining book value is how much? 1342, is using the same principles. So 1342, in year 10 we are only supposed to depreciate 1342 ka 20%, which is 268. So how much are we left with? 1074. Because so what we do is, instead of saying ki 1000, we actually this is an endless process. This is an endless process. Why? Let us say the value is 1000. Even if 50% depreciation is charged, 1000 becomes 500, 500 becomes 250, 250 becomes 125, 125 becomes 62.5, becomes 31.25, 15 point and even when it becomes 1, the same process starts, 1 rupee, then 50 paise, then 25 paise, then 12.5 paise. There is no end to it. So therefore, at the end of 10 years, we say कि यार remaining book value भी लेके खत्म करो. So we add remaining book value 268 plus 1074 and depreciate 268 as per the normal calculations plus the salvage, or not the salvage value, but this 1074 being the terminal value after 10 years. खत्म करना है ना. We have to close the books. यार जबरदस्ती open करके क्या करेंगे. You remember day one I was talking about pencil. You can depreciate a pencil. Life is 5 years. You can depreciate it. अब बोल उसमें भी अगर लगा दिया कि रिटर्न डाउन वैल्यू से किए करेंगे तो ठीक है. बोला 20% इन फर्स्ट ईयर करते जाओ. बोला इस दिस ईयर 2 years 1 rupee, नेक्स्ट ईयर 80 पैसे, उसके बाद 60 पैसे, फिर 40 पैसे, फिर 20 पैसे करते जाओ डिप्रिसिएशन. गेटिंग. इतनी सी पेंसिल बच गई. डू यू स्टिल वांट टू कीप डिप्रिशिएटिंग इट, और बोले उसको कूड़ेदान में फेंको और अपना काम करो. आर यू गेटिंग व्हाट आई एम सेइंग? सो दैट्स व्हाट इज हैपनिंग फ्रॉम बिजनेस परस्पेक्टिव. जैसे फॉर एन इंडिविजुअल पेंसिल छोटी सी का कोई वैल्यू नहीं है. फ्रॉम अ बिजनेस परस्पेक्टिव विच हैज़ 10,000 crores of rupees, उनके लिए 1,000 को बोले यार डोंट वेस्ट माई टाइम. इफ़ यू गो टू द CEO, इफ़ यू गो टू मुकेश अंबानी सेइंग 10 रुपये खर्चा करना है कि नहीं करना है, ही विल थ्रो यू आउट ऑफ हिज कैबिन कि आगे से आना मत मेरे पास. आर यू गेटिंग व्हाट आई एम सेइंग? हाँ.
How will we present this 1342 in the table? मतलब इसके आगे we will be putting a note.
इन नोट दे दो, एक नोट कि 268 प्लस 1074 इज बीइंग डेप्रिशिएटेड, जैसे नोट दिया है. एग्जैक्टली इन द सेम मैनर. कैलकुलेशन ऐसे ही करना पड़ेगा, बट नोट दे के खत्म करो. सो व्हाट वी हैव नोटेड इज depending on the method used for charging, we have a different amount of charge for annual depreciation. In a straight line, it's a linear one, 1 every year. But in a written down value, higher in the initial years and going down in the future years. That's what we have noted, right? Difference is only in terms of annual apportionment. Net effect of the methods is therefore in terms of showing less or more profit in any particular year. Do you see that? When you show equal profit, equal expense, then the profit to that extent, other things remaining the same, the ceteris paribus assumption of your economics class, other things remaining the same, the profit is equal. But if you show more expense, then the profit goes down. If you show less expense, then profit goes up. Clear? Are you all clear? If you show more expense, then profit goes down. If you show less expense, profit goes up. So, since in written down value is like this, right, going down like this, while straight line is like this. You see that what I am saying? So, what is tangible versus intangible asset? Tangible assets are assets that you can fee, we already know, land, building, machinery, etc. Intangible, unseen. पहले ये देख लो.
आज मेरे पास बिल्डिंग है, प्रॉपर्टी है, बैंक बैलेंस है, बंगला है, गाड़ी है, क्या है तुम्हारे पास? मेरे पास माँ है.
What the point? So, the love and affection of a mother is an intangible asset, right? So, he says I have bank balance, building, गाड़ी, property, bangla, factory, तेरे पास क्या है? So, what is the value of land, building, bangla, gaadi? Maximum 100 crores, 200 crores, 500 crores, 1000 crores, 10,000 crores, 1 lakh crore, right? So, that is on one side. And what does he have? मेरे पास माँ है, so I have love and affection of my mother. And what is the value of mother's love and affection? Infinite, right? And what is the cost of, let me ask you 3 questions. What is the value of a mother, what is the price of a mother, and what is the cost of a mother? बताओ भाई. What is the value of a mother? What मेरा question है, value है. What is the price of a mother? And what is the value of a mother? Infinite. And what is the cost of a mother? Uncountable. किसने बोला cost uncountable है? How much money did we pay for getting our mother? Its mother came to us free, given by God, right? Mother is free. The cost of a mother is 0. The cost of a mother is 0. ये बाद में काम आएगा. I do these things in management accounting more, just to help you understand the difference between cost, value and price, right? Do you see the difference? Cost of a mother is 0, price of a mother priceless, value of a mother infinite. Are you seeing what I am saying? So, price of a mother is priceless, nobody will sell his mother, right? So, the point is, point तो दूसरा था कि tangible versus intangible assets. Point was tangible versus intangible assets, right? So, for tangible assets we charge depreciation, but for intangible assets the same charge is called as amortization. The same spreading of cost over the useful life is called as amortization. So, intangible assets are assets that cannot be seen or touched. What are tangible assets? Land, building, furnitures and fixtures, machinery, equipment, laptop, phone, these are all fixed assets. The useful life, other than land, all assets, all fixed assets will be depreciated, other than land, because land में depreciation इसलिए नहीं होगा because it will continue to exist. Land will continue to exist, so you don't depreciate land. Even this building we have to depreciate at 2% per annum. We will assume कि ठीक है, the life of the building, the brand new building, ठीक है, is let us say 50 years. So, we have to still depreciate it at 2% per year, but land will not be depreciated. Are you all clear?
Sir, as you said that this building will depreciate at 2% per month.
2% per annum.
Per annum. So, sir, how do we get to that percentage? Is it?
Because first you have to estimate the useful life, and then it's 100 divided by the useful life. We said 100 by n, n is the useful life. So, 100 n, let us say the useful life is 50. So, the percentage is 100 by n, which is 100 by 50, that is 2%. If the useful life is 10 years, then 100 by 10, which is 10%. If the useful life is 5 years, then 100 by 5, which is 20%.
The depreciation for cars is more than.
No, that was not that. It is only for straight line basis. For depreciation for using written down value, you will have to follow guidelines. You will have to. मैंने वो straight line के लिए समझा रहा था. As it is, there are guidelines of Companies Act and there are guidelines of Income Tax Act. So you have to follow those guidelines for the purpose of charging depreciation.
The rates are already predetermined.
क्या? The rate?
Rates are already.
हाँ, already specified in the Companies Act के schedules में देख लेना. And then also Income Tax Act also, and we also have something called as, we prepare books as per Companies Act, and then but for the purpose of taxation, we have to prepare books as per the Income Tax Act, and the rates of in Companies Act and Income Tax Act will differ. The rates will differ, so you will have two separate sets of books, one for tax purposes and one for this purpose. So, intangible assets we already know, and the process of expiring intangible assets is, instead of depreciation we will call it amortization, and we amortize for intangible assets, we just amortize on straight line basis over a reasonably short period. The reason is, even if you have come up with a patent for or a new technology, chances are so you don't depreciate it कि 40 साल तक depreciate करेंगे. No, you depreciate it over next 3 years or something, very fast. Why? Because you never know who will come up with a new technology very soon, and your technology itself may become worthless, right? So, no one uses cameras these days, everyone uses cell phone, right? So, that is the reason. So, let us look at the vertical format of profit and loss account. So, do you remember yesterday we were talking about two formats of profit and loss account, the vertical format and the horizontal format, right? So, what is the vertical format? I said, if you remember, was revenues minus expenses is profit, revenues minus expenses profit. What is the horizontal format? I said revenue on this side, expenses on this side, balance is profit. You remember that? क्या?
Balance sheet जैसा format है.
हाँ, it's called T account. T. मैंने T बनाया था, if you remember T, and then I said revenues, expenses, balance. So, the vertical format of a balance sheet will look like this: sales net, say 255, other incomes, you may remember other incomes I had discussed yesterday. Some एक दो other income बोले थे ना हमने. Infosys dividend, sale of mangoes, interest on FD, right. So, total revenue is how much? 260. Cost of goods sold is how much? Say in this case assumed 130. So, gross profit is how much? 130, and then we subtract operating expenses, right. Operating expenses is how much? So, operating expenses, personal, depreciation, other expenses, other में सारे बाकी सारे डाल दिए. We have put everything else under other expenses. So, operating expenses are these three. So, gross profit minus combined operating expenses gives us operating profit. The other name for operating profit is EBIT. What is the other name for operating profit? EBIT. It is coming up in one of the slides. Earnings before interest and taxes, and operating profit is also called OPBIT, operating profit before interest and taxes. OP is operating profit. Then from that you subtract interest, you get profit before tax. Then from that you subtract tax, you get net profit after tax. So, profit after tax ka short form is PAT, we call it PAT, and profit before taxes is called PBT, right. And this is anyways the operating profit is called EBIT, and if you even add back depreciation, it is called as EBITDA, EBITDA, EBITDA. It is coming up in one of the slides. Yeah. The same thing can be represented in a horizontal format, because what we were talking about yesterday. So, sales you can see is 255 plus 5, 260. So, and against 260 what do we see here is cost of goods sold is 130. So, 260 minus 130 we are getting gross profit of 130, and against 130 then we take into account. So, this 130 becomes actually that side is heavier, right. That side is heavier, that side was 260, this side was 130. Just to balance we wrote 130, but the truth is that side is heavier, so it gets carried forward on that side. Against that 130 we have personal expenses of 49, depreciation of 11, other expenses of 28, just assumed. So, we have operating profit called EBIT 42 after subtracting these three from that gross profit of 130, right. And you know, please note this thing, that these are just for the time being just imaginary numbers taken from one of your sums in the book, but we also have a schedule. Check this, the schedule means for everything we have prepared a schedule that the details, this is just a summary number, this is just a summary number, the details are in the schedule. How this 255 was arrived at, how this 5 was arrived at, how this 130 was arrived at, or all of these, the details of all of these are in the schedule, right. Are you all clear? And so, then we have, once you subtract all three, we get our EBIT of 42, which is again shown on that side as EBIT of 42. Against that we have interest of 12, so profit before tax is 42 minus 12, 30. This is just a totaling, as you can see, this is just a totaling, this is just a total, even this is not this, this 130 is a total, this 260 is a total, you can see that, right? You all can see that, huh? Then we have tax. So, again profit before tax is taken on that side 30, and then we have tax of 12. Assumed how much is the tax rate here? 40%, दिख रहा है ना? 30 में 12, 40%, right? And net profit after tax is 12, then 18 is the balancing figure. This is the balancing figure. Can you see that? Anyone having trouble with this? So, are we all clear on this part? This is exactly the same as what the previous one. Previous one it was in a vertical format, this is in the horizontal format. It is only a change of format. Which side is heavier? So, his question was what if there is loss? Just as profit is on this side, if sales is 260 and cost is say 390, then you will say my loss is 390. So, loss will come here, loss 130, right? We all clear on that? हाँ बोलो.
Sir, why are we giving income tax after interest? Isn't income tax more important?
It is not important, it is good for you, first thing. Why? Because you can show more expense. Interest, you can say my profit, let us say, just think of it. Before, अभी interest के भी पहले, what is the operating income? 42. So, you want to, if 42 is your operating income and your interest is 12. So, do you want to pay higher tax or do you want to pay lower tax after being legally correct? Lower. Is interest a genuine business expense? Is interest a genuine business expense? Right? So, you deduct that to arrive at your profit before tax, because tax is paid on the final profit, but not on the net profit, on this amount, on the profit before tax. The all profits after considering all revenues and all expenses, what is the profit? And on that profit you pay tax, and then that is the reason we have profit before tax is this much. Then you say ki after you do, have you understood at least conceptually, you want to pay interest tax on 42 or 30? You want to pay tax on 30? Clear? So, that is what is happening. So, tax has to be the final number which you pay on all your incomes. And this is clear because we have already seen the vertical format. It is very mathematical in nature. All of you are good at mathematics, having cleared CAT, therefore, right. And now let us look at some of the schedules. How do they look like, right? For profit and loss account, how do they look like? Gross sales we saw is 260, right? But we also are looking that in addition to gross sales, we have two more things coming up, something called as sales returns and allowances. When you buy a product which is defective, do you go back to the shopkeeper saying कि मैंने आपसे ये कपड़ा लिया था, ये तो कटा हुआ है, this cloth is torn, so we return it, right? Please take back the cloth. So, if we buy a defective product, any defect, we will go back to the shopkeeper saying, please take back, either you exchange the product or give me my money back, right? So, that is what has happened to us. There were some defects, people say, please take it back, they have returned, right? Allowance basically is one reason for allowance can be कि ठीक है ये तो आ गए sales, but we also know कि when we are selling 1 lakh of rupees of items, from previous experience we know कि on an average 0.1% or 0.01% people will come back to us. So, then you say कि okay fine अभी तक आया नहीं है, but at the end of this period I still create a provision or a sales allowance, sales return allowance, saying कि this much is still possible. What you have just sold something on 31st of March, the person will come to you in early April, here look at your product. Are you getting what I am saying? So, that is what it is. Then we also have sales discount, and we are coming to that in the next, that is next slide actually, sales returns and sales discount. So, net sales is how much? 255, we will look at sales discount. And then you know what this has, what they have done in this schedule is, they have then broken down net sales into domestic sales and export sales. So, things that you are selling domestically and things that you are selling internationally. And within domestic sales, they have again broken it down into 4-5 parts. You know, look at a company like ITC or Hindustan Lever, right? ITC will have a cigarette division, it will have a hotel division, it will have a food and edible oils related division, it will have multiple other divisions depending on what is being sold. So, for ITC something like a cigarette division, hotel division, food division, etc., etc., etc. So, for this company also we have multiple divisions, machine tools division, watch division, tractor division, lamp division, dairy machinery and so on. So, the joint total of A plus B plus C plus D plus E is your total domestic sales. Then again the same thing for your exports, all the divisions that are exporting, you add them together for exports. You see here machine tools group exported 6, watch group exported 2, others exported 2, the total exports is 10. Are you all getting it? So, we have broken down the total sales in terms of domestic sales and export sales. Again within domestic sales, we could have, you know, here the division is in terms of domestic and then export, and then further subdivision is domestic, division A, division B, division C, division D and division E. It could well have been division wise also in the first instance, the total 255 for all the 5 divisions, division A, division B, C, D, E, and for each division then you show domestic is this much and export is this much. Are we clear? It does not matter, वो तो matrix है, 2 by 2 matrix कर दो, either domestic, international or division A, division B. Got it? So it could have been done both ways. Yeah, this is schedule 2 which we are talking of. Sales returns and allowances not according to specifications, damaged or defective. So then you have either they have already returned, or if they have not yet returned, based on experience you know ki there is a 1% chance or 0.1% chance. So if the sales figure is say 1 lakh crore, so even though somebody has not yet come, but 1 lakh crore में बोले यार 10 crore तो sales return का डाल ही दो. Are you getting what I am saying? So 0.01% or some percentage you choose based on past experience, you put it under that. You have seen companies like even big companies, Toyota and others, big companies recalling cars. You have seen those things, right? In spite of taking maximum good care, still there was some defect. Volkswagen to had far bigger incidences, right? Right. So we are not even talking about that because that was fraud. That was fraud, and not trying to suggest anything against any company, just giving some examples that we have seen in business life, right? But even Toyota had to recall its cars, and which was unusual because usually people will say that Toyota products are like one of the best, right? Very high quality products, right? So, and what's the sales or a cash discount? Sales or a cash discount is basically, so what's your name? Vaishnav. You are a rich man?
Middle class.
Middle class. Let's say he is a rich man. Yeah? He is a rich man. I am selling, usually when I sell to people, I tell them, ki, I will give you, in our industry, we give 60 days discount. We gave how much? 60 days discount, right? But he is a rich man. So in his case, I tell him, ki, the 60 days discount is for people, normal people. If you take 60 days, you have to pay me 100 rupees, right? 100 rupees de dena, theek hai. But since I know he is very rich, he can afford to pay early. So I tell him, ki, see, if you pay within either right now or if you pay within 10 days, you only have to pay 97 rupees. You don't have to pay 100 rupees. For him, ki, it's better, well, apne to kya farak padta hai, abhi do, 60 din baad do. If you are getting 3 rupees off, then he is okay, well, ki, theek hai, I am happy to pay 97 now or within 10 days rather than 100 after 60 days. Are you getting what is happening? So this is what happens in business, that you get sales discount or cash discount. It's the same term. Sales or cash discount are exactly the same thing. A reduction from invoice price, a reduction, and please note the word, from invoice price. Bill में से मिलेगा कम. Bill 100 का है, but you only have to pay 97. And what happens to the balance sheet? So when I sell for 100, increase in owner's equity is how much? 100. Increase in owner's equity is how much? 100. And how much, when you get cash 97, then how much is the increase in asset? When you get cash 97, how much is the increase in asset? 97. What happened to the balance sheet? Increase in owner's equity is 100. Increase in cash is 97. What happened to the balance sheet? 3 रुपए कहाँ गए? क्या? Equity will decrease because of discount, cash discount, right? So, but it will be shown separately. Sale to 100 का ही था. You didn't wait for 60 days. You could have very well waited for 60 days saying no. You pay me after 60 days, but pay me 100. But you said no, I need money. You pay me in 10 days or immediately, I will give you 3 rupees off, right? So how is it written? A 3% discount if payment is made in 10 days. Otherwise, net amount to be paid in 60 days is written as 3 by 10, comma and 60, which means net 60. 3 by 10, 3% discount if paid in 10 days. Otherwise, net 60 days. So that's how it's written. Look at the last 3 lines. Trade discount is separate. When you go to a shop and if you want to buy a laptop, let's say laptop is of 50,000 rupees. If you are buying one laptop, you will pay 50,000 and come back. If you go jointly, all the 600 IIM students nominated you as the representative, and you are going to buy laptop for all 600 students, will you tell them कि भैया 50,000 or will you tell them कुछ discount दो? We are buying 600 laptops from you. Are you getting it? You have bargaining power. And they will also think, okay, on every laptop I am actually making 15,000 rupees. Let us say, on every laptop I am actually making 15,000 rupees. My real cost is 35, but I sell at 50,000 rupees, right? And he sees कि 600 आदमी का ऑफर आया है, I have an offer for 600 laptops. Will he sell it to you at 50,000 or will he think he let me grab this customer and try to get the best possible profit for myself? So, he will say, okay, for you guys I will reduce my cost from 50,000 to 40,000 for 600 laptops. Are you getting what I am saying? So, that reduction in cost, which for then what is the selling price agreed at? 40,000. Earlier for one person it was 50,000, but for 600 people he says 40,000. So, this reduction or this discount is called as trade discount when sales are done in bulk, but it is never, look at the key thing, it is not brought into accounts. The reason it is not brought into account is because the selling price itself was 40. When you record the sale, you record it at selling price. The selling price itself was 40,000. So, this reduction from 50 to 40 does not appear anywhere in the books. Are you getting what I am saying? Because the selling price as per the books is also 40,000 only. That is the reason it is saying never brought into accounts the sales, and the sales invoice are valued at net of trade discount. So, 50,000 minus this 10,000 trade discount, 40,000 into 600 laptops, he has earned he still earned a lot of money, because on 600 laptops he has still earned 5,000 per laptop. हो गया उसका तो काम. You got what I am saying? And other incomes we already know were operating incomes which are derived from the mainline operations, and other incomes which are activities incidental to business. What were those activities incidental to business which we discussed yesterday? There we discussed 3: interest on FD, Infosys dividend and sale of mangoes. Do you remember that? Yes. So, these were not our core operations, they are not even side operations, they are activities incidental to our business, right. Are you getting the difference? What are other incomes? We have already discussed, so I am skipping this slide. This is exactly what I was talking, Infosys dividend, interest on FD and sale of mangoes, and at times you will get interest from bank, you will get some other interest, you had some FDs, wohi ho gaya. And interest on staff, you know, at times a company may give loan to its staff, right, depending on their levels. So, banks to give it all the time. If you work with a bank, they will give to their own staff either interest free loans or loans at a very low rate of interest, 2-3% or rate of interest. To the rest of the public they are charging how much? They are charging 10%, 8-9% on your educational loan. Many of you have educational loan, right? You have to pay कितना 8% देना पड़ता है, 7.5%, 8-9% देना पड़ता है ना. But if you are a bank employee, you only pay either 0 or very low rate of interest, 2-3%, that is it, right, depending on. So, bank, not bank, even otherwise some companies also give interest free loan or low rate of interest loans to their employees, either interest free or low rate of interest. And what are those ones? So, interest is, so for them I am, so let us say we are the company and he is one of the employees, he said give me loan, so we gave him loan, right, and loan was 1 crore at 2%. So, we are not in the business of giving loans to people generally, but in this case he was a good senior employee, we wanted to retain him, we said okay, we will give you 1%, 1 crore loan at 2% interest. On the 2% interest we earned how much? 2 lakh rupees. Are we in the business of earning 2 lakh rupees from giving loans to employees? No. It was just to retain this employee, or as per the company policy we have given loan to the employee. So, this 2 lakh will appear under other incomes and so on, right. There may be other cases also like export incentives which was also written there. So, cost of goods sold is a complex thing in case of multi-product, multi-division companies, and I am skipping this slide because let us directly look at the example how it is done in practice, right. So, let us now look at cost of goods sold, how it is done. The conceptual basis of what is written here, I will just explain in 1 minute first. Last night you slept, your bank account had 10,000 rupees. This morning you woke up, our bank account still had 10,000 rupees, right. I like you, I gifted you, assume, not actually, assume I gifted you 1,000 rupees. What is your bank balance now? 10,000 plus gift received 1,000, 11,000. you spent 300 rupees during the day on your expenses. How much are you left with? 10,700. So, the closing balance of last night was the opening balance of this morning. The closing balance of last night was the opening balance of this morning. Then this morning, then that 10,000 is there. There are some inflows and there are some outflows. There are some inflows and there are some outflows. So, the opening balance of this morning, which is the same as closing balance of last night. So, in the opening balance of this morning, I add all the inflows and subtract all the outflows, then I arrive at the closing balance. 10,000 plus inflow of 1,000 minus outflow of 300, I arrive at 10,700, which is the closing balance. Are we all clear on that part? Now, this is conceptually the same thing. Yeah? Conceptually, this is the same thing. So, let us look at it now. Inventory on 31st December. So, assume the financial year is January to December. US की slide है. Inventory on 31st of December was 81. Inventory on 1st January is also 81 morning, 1st January morning. Then we add all the inflows on account of purchases. And as I said for machinery, did I say for machinery we will consider, for machinery what we will consider? The transportation cost also. Similarly for freight, for purchases also we will consider the transportation cost as cost of goods only, right? Because when you sell 10,000 का माल था, you bought for 10,000, when your transportation cost was 500, will you ignore the transportation cost while fixing the price, or will you consider the transportation cost while fixing the price? You will consider the transportation cost. Will you sell when the transportation cost is 500, will you sell it at 10,100 की 10,000 ही तो cost है, or will you say no, the cost is 10,000 but I also incur transportation cost of 500, so the real cost to me is 10,500, not 10,000. So you will not sell it at 10,100. He comes to you, says sell it to me at 10,000, you बोलेगा भाई मैं नहीं बेचूंगा, 10,000 तो cost ही था, 500 रुपया transportation है, entire headache I spent one day, so I have to consider my labor or some profit if you think of yourself as an entrepreneur. You will say भैया 11,000 के नीचे मैं नहीं बेचूंगा, so much headache, after so much headache I got it at 10,500. Are you getting what I am saying? So that's what is happening. So you will add closing balance of last night is opening balance of this morning, closing balance of last year is opening balance of this year, then you add all the inflows, purchases, freight, other direct material costs. So this is how much is available with you, that 10,000 plus 1,000, 11,000, and then you subtract everything else to arrive at the final figure. Are you getting what I am saying conceptually? And so what do you subtract? See, if the business was only a trading business, then you are buying pants and shirts and selling pants and shirts. If the business was only a trading business, what trading means, एक वो माल खरीदा वैसे का वैसा बेच दिया. You buy pants and shirts and you sell pants and shirts. But if you are also a manufacturer, then you buy raw material, you buy all the clothes, right? You buy all the clothes, and then what you do? You have a tailor. You have to pay the tailor his salaries, right? And this tailor will do stitching for you, right? And then you have to buy needles, threads and all those things, other direct material cost. Are you getting what I am saying? And then at the end you will have three types of materials left with you. Plain raw material clothes, plain clothes, right? You will also have some semi-stitched pants and shirts. You know, he has already stitched partially, but he has not yet applied buttons, he has not yet put the collar, and he has not yet stitched the other part. You know, are you getting what I am saying? So inner linings have to be made for suits, right? So some are partially, some that's called as work in progress. The first one, just the plain clothes, जो थान में से कपड़ा आया था, that's called as raw material. The partially stitched clothes are called as work in progress, and the fully stitched clothes which you can sell are called finished goods. Are you getting the point? So we will have raw materials, plain clothes. Some of you might have gone to Shilpa Garments yesterday. They showed you plain clothes, right? And then they will convert it into initially work in progress and subsequently into finished goods, and then they will give it to you, right? So that is the difference. So then you will total goods available means you will subtract raw materials and semi finished goods, then that is the goods available for sale, and then you will again subtract finished goods. So these are all the outflows, and so this is what you actually sold. Are you getting conceptually what I was saying? So gross profit reflects the direct input cost, to a great extent variable with the volume of operations, that we can see. If there is no sale, there is no cost also, right, because then everything is inventory. If there is no sale, then there is no cost also, effectively. वो तो labor cost तो होना ही पड़ेगा ना. Go down rent has to be paid, staff salary has to be paid. So of course there will be some cost, but not cost of goods sold, not cost of goods sold. And then operating expenses are what? Cost of making the inventory available for sale, direct or indirectly traceable to inventory and usually segregated under selling expenses. It is called actually segregated under one category called as SG&A. SG&A is what? Selling, general and administration expenses. What is SG&A? Selling, general and administration expenses, right. And of course, there are personal expenses. How many of you have work ex? Oh, lot of you have a work ex, yeah, that is very good. So did you get only basic salary, or did you get basic salary, some HRA, some other allowances, and then finally they will give you the total CTC, right. So you will get provident fund and gratuity and other benefits, right. So that is what the personal expenses includes. We have the salaries, wages and bonus will include house rent allowance, gratuity, contribution to PF, contribution to ESI, other welfare expense related thing. They will then include, and this is your total CTC, cost to the company, right. So personal expenses similarly are categorized into those categories. Depreciation I will not touch because we have already covered it in enough details today, right. Depreciation we will just say ki haan theek hai, depreciation on various fixed assets, we take it, fixed assets, tools, patterns, fixtures, etc. We know how to do it. And then of course we have other expenses. Expenses other than those disclosed separately are usually grouped together. So relatively small when considered as individual items. So let us look at the category, let us show all other expenses. So for all other expenses we have made a power and fuel, rent, rates and taxes, insurance, water, electricity, repairs to building, repairs to machinery, printing and stationery, advertisement, publicity, audit fees, royalty, sole selling and other agents commission, directors fees, provision for bad debts. Are you seeing that? So these are the kind of expenses that you will normally see in business. Any questions on this part? Are you clear? Na? These are all self-explanatory, right? These are different types of expenses that you will normally see. Even at IIM campus, most of the expenses we will see, all of these, right. So operating profit is the same as EBIT. Operating profit is the same as EBIT. It is a measure of operational efficiency and it is obtained by deducting all those personnel, depreciation and other expenses from gross profit, and it is called as EBIT or OBIT. EBIT is earnings before interest and tax, OBIT is operating profit before interest and tax, it is the same thing, but nobody uses OBIT, everyone says EBIT. Yeah. And what is interest expense? You know, we decided to fund 10,000 rupees from each of our when we started our business. Let us say none of us had more money. So we said we have already put so much money, but we still need 1 lakh rupees more for our business, right. So we can take loans for either long term or for short term, right. So we need 1 lakh rupees more. What do? We go to a bank, please give us a loan, right. So bank gave us a loan of 1 lakh rupees. On that 1 lakh rupees, will they give it free or will they charge interest? They will charge interest. They charge 10% interest, right. So this 10% interest, we incurred 10,000 rupees of cost, right. So this 10,000 rupees of cost, is it our normal business cost or is it a cost of financing? Are you getting what I am saying? अगर हमारे पास बहुत सारे पैसे होते और हमें बैंक लोन की ज़रूरत नहीं होती, if we had lot of money and if we didn't need the bank loan, then we would not have to incur this interest expense because we have anyways have lot of money, right. It is only because we are short of money that we had to go for interest expense, right. We took bank loan because we didn't have money. Your dad has 10,000 crores, say, yeah, don't be too happy. Your dad has 10,000 crores, say, will you go to bank asking for कि मेरे को 15 लाख का लोन दो for my IIM Sirmaur first year fee? You will not, right? But if you don't have, then you will go to the bank, right? So this represents not the fact that our business is good or bad, but the fact that we did not have enough finances available with us, and therefore since we didn't have enough finances available, we went to the bank. Are you getting that? So it has got nothing to do with the business per se, the business profitability per se. It is a separate thing that, oh, we needed more money, we didn't have enough money. So it was a financing decision, right? It was a financing decision. So the point is, interest expenses arise out of management's decision to finance part of the asset from borrowing, and it has got nothing to do with business per se, it is part of the financing decision. Even in that case, it is not part of need, it is part of my financing decision that no, मेरे को मेरा 5% में लोन मिल रहा है effectively और मैं 9-10% में शेयर मार्केट में कमा रहा हूँ, तो why should I not take the loan? फ्री का लोन मिल रहा है practically or at a very low rate of interest, but still that's a financing decision, and that's what I am saying, that it's a interest expenses arises out of management's decision to finance part of the assets from borrowings. And so let's see the Excel sheet, we will just see these concepts. Excel file खोल दो. Operating profit, interest expense, profit before tax, then we subtract. So just so sales, you know what we are trying to show here is sales was 255 plus income 5, so total revenue 260 less cost of goods sold, so net profit, gross profit is 130, which you have already seen, right? Less operating expenses, 3 operating expenses, personal, other, and I have just introduced a new category here because EBITDA, because depreciation, all other expenses are cash expenses, but depreciation or amortization, when you bought the car you paid 10 lakh rupees, every year you charge 1 lakh rupees, but do you actually incur 1 lakh rupees every year? No, you incur 10 lakh rupees at the beginning. So depreciation is an expense which is just an allocation of your original cost over the life, but it does not entail any cash expense. Depreciation does not entail any cash expense. Therefore, all cash expenses on this side, then we arrive at EBITDA, then we subtract depreciation and amortization, then we arrive at EBIT, then we subtract interest, we arrive at PBT, then we subtract tax, we arrive at PAT. This is what we are trying to say. Are we all clear on this part? And this is anyways the same figure as that, and these are the schedule numbers. So it's exactly the same thing, but in an Excel you can see that, okay, there's one more concept called EBITDA, and all the profit figures I have usually profit is to be written in shown in green, but I have shown in red just so that it can be seen better. Hi, this is Dr. P. Sanjay, and I am a professor at Indian Institute of Management, IIM in Sirmaur. If you like my videos, please feel free to subscribe to my YouTube channel. Thank you.